It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
Hey, welcome back to the Real Estate Breakfast. Yes, your weekly window into the Australian property market. And if you are a new listener and would like to get in touch with us with anything that is on your mind, you can either use our voice recorder, it is available below, or you can email us like Veronica has done, who writes to us from San Diego. You tell us that you are Spanish, you have been living in the US for the last 5 years, and you really don't like what is going on in the US around politics. And you've loved Australia for many years, and you would love to move to the Gold Coast, but it's all about the timing. In the meantime, you are understanding the Aussie property market much better and will keep on digesting real estate information. Great email and great to have you listening there in San Diego, Veronica. You wouldn't be the first, to move from the US to the beautiful Gold Coast region. And if you are in the US and listening right now, do you too want to move? And if so, where in Australia would you like to move to? Our email, as always, is myrealestatepodcast@gmail.com. We would love to hear from you. It is a Tuesday, August the 4th, and if you are a first home buyer saving for a property, Sarah Thompson in Canberra from Loan Market, who we spoke to not that long ago, has got some great information. And good morning to you, Sarah. You've been doing the mortgage thing for quite a while now, in fact, over 20 years. And in that time, you would have seen many changes.
Hi, Craig, and thanks for having me. I definitely have, over the last 20 years, seen many changes in, obviously, finance and real estate, but it's a great business to be in.
And you've got one of the biggest female brokerages in Australia.
Yeah, we do actually. Surprisingly, we've got a huge amount of women that work for us, but we do actually have 2 boys now, which is lovely to have. So we're trying to even the scales a little bit. But a lot of women in this role, obviously dealing with finance and dealing with people's very big time in their life when they're purchasing property. It can be quite intimidating, and we just love to guide people through the process. So I don't know. We seem to attract women in our office, I think, more than anything.
And there's a little bit of a misconception around guarantors these days. Perhaps explain to those listeners what a guarantor is and the different types and what misconceptions are out there in the marketplace.
Yeah, absolutely. So if people aren't or can't get part of that first scheme spots, guarantors could be another option, where we always talk about the children and the adults. Generally, that's the way it would work. But the children would use a parent, and it generally needs to be a parent, but a lot of banks are different. Some will take a sibling or an uncle or an auntie or a step parent. But basically with a guarantor, it's generally the children that are asking access to a parent's property. And we sort of describe it like they're grabbing a bedroom of the parent's home and holding on to that as security. So it's generally a limited amount. It's only limited to whatever the kids need to keep their property under 80%. So with that, the guarantors generally need to seek legal advice with most banks. Not all banks offer a guarantor loan though, so some specialise in it and are better than others. Really what happens is the kids' bank will grab a bedroom of the parents' property and hold that as security until the kids have enough equity in their home to actually release the parents' property. And a lot of times, obviously, guarantors won't do it if they don't trust their kids to actually be able to pay down some debt or increase the value of the property as well with renovations.
Lenders mortgage insurance. This is a big handbrake for a lot of people, Sarah, scraping up on their deposits. Let people know why they need it, and I guess, is it worth it?
Yeah, great question. So with lender's mortgage insurance, it's actually a bank insurance, and it covers the bank if the borrowers default on their mortgage and they cannot recoup the property or the price that is outstanding on the mortgage. If they can't recoup that back, then the lender's mortgage insurance will actually cover that to the bank. So really, it's a bank insurance for themselves. It doesn't cover a client for their own home loan. There's good and bad, obviously, with LMI, we call it. It's a necessary fee sometimes if you're borrowing borrowing over 80%. And sometimes it can be better paying lender's mortgage insurance now to get the property, sooner than having to save another $30,000. But by the time you do that, the property might have gone up by 100. If the mortgage insurance costs you $5,000, but you can get it now and not have to wait to save for further amount, and obviously the delay in time, I think it can sometimes be a really good option.
We should talk about why people go back and forth with the question about engaging a mortgage broker in the first place. So when do you think is the best time to see a broker, and how important is it for people financing up their loan to do that through a broker?
Seeing a broker at the start of your journey can definitely help, because they're going to put you in the right stage from the very start of where you need to be in the education piece as well. Also, having access to over 60 different lenders, which we have at Loan Market, means that we can go to so many different banks to be able to assist a client and find the best deal for them. With lenders as well, as we were talking before about the government schemes, if you walk into particular branches, they actually may not even be part of that scheme or on the panel for that. So we can save people a lot of time and a lot of money. And you reach out to a broker at any time, refinancing, upgrading, downsizing, any of those.
Now, one of the crucial advantages to using a mortgage broker is having access to their lenders, because we mere mortals will only have access to the bank that we are banking with, and a lender can affect your borrowing power and capacity, which some people really, Sarah, don't take into consideration.
Yeah, that's true, Craig. Every lender has different policies, different products, and different serviceability, which is how much you can actually lend with them. So as brokers, we've got access to a huge amount of those, unlike walking into a bank and having reduced options there. And the lender that you choose can be the difference between getting the property you want, because you can lend a higher amount with that particular bank, or actually missing out on the property. So it's really important to be able to understand the difference between all of the lenders.
Yeah, I'm always constantly amazed at just how many people just don't use mortgage brokers. Particularly, I think, people that have bought their first property, maybe they're on their second or third, and they just stay with this loyalty with their bank. And tell you what, there's no such thing as loyalty when it comes to a good rate, right?
100%. That's so true. So, and also as brokers, that you can project manage clients, whether it's their first, second, third property, without charging fees. And again, we've got access to so many banks, and it's a free service too. So sometimes we go, why wouldn't you use it?
We dive deep into topics like buying, selling, investing, and maximising your property's value, from mortgage advice to the latest property data and trending numbers. Your real estate journey starts here.
And right now it's time for another 30-second property tip. We are catching up with Brett in Brisbane. And good morning to you, Brett. What have you got for us this morning?
Good morning, Craig. I'm thinking today about sellers who wonder whether they should have a building and pest inspection done before they put their property on the market. And I have a couple of clear categories about how that might be. If the house is a total renovator, my view is not to, because they'll want their own building and pest inspection. But if the house is in beautiful condition, I always encourage it. But the thing is, nobody wants live pests. Nobody wants termites. So even if you choose not to have a building inspection, make sure you have a pest inspection that guarantees there's no activity on the house. So that might help with some people wondering what to do.
And when you decide to save up for a home deposit, there is an untold amount of things that you need to get in place. And a lot of first home buyers think that it's quite an easy process to work out how much money you can actually loan. That mortgage money that you are loaning is largely worked out through your borrowing power. So, Sarah, you can step through for our listeners, I'm sure, how somebody's borrowing power is calculated, because I think a lot of people just think that it's based on their income.
Yeah, correct. So it is income, but obviously things like liabilities that clients might have, things like that would be HECS or buy now, pay later, which a lot of people forget about, and that can impact how many dependents they have. Are they paying child support at the moment? What are their living expenses like as well? So somebody with really high living expenses, can then generally borrow less than if somebody that was earning the same income was spending a little bit less as well.
Okay, so you have been told what your borrowing capacity is. and it will either make you cry or you'll be doing backward somersaults. So if you have gone for a mortgage and your borrowing capacity isn't great, the good news is, Sarah, you can give out some of the pointers in the right direction on how somebody can increase their borrowing capacity.
Yeah, there's actually lots of things that you can do to increase that capacity. So you could reduce your credit card limits or close them down, pay down personal debt. You could refinance your car loan if you have one or pay it out. But if you refinance it, lower loan repayments each month instead of potentially higher ones. HEX is a big one, obviously, in Australia, those study loans. So getting rid of that can definitely help borrowing. Salary sacrifice or tax-free income. People getting a second job. At the moment, we're finding a lot of first home buyers are getting a second job to try and get into the market. We could re-extend home loans back to a 30-year loan term if they're at 25. Or you could buy with somebody else, a friend or a family member, but you might want to get legal advice with that one. So there are lots of things that people can do to increase that.
And also around credit cards, quite interesting. I know that we got an email not so long ago from somebody that was talking about changing banks, and they had a credit card, I think the limit was $10,000. The new bank that was going to take their business on said that they wanted to close down. They saw that $10,000 limit as a bit of a liability, which I hadn't really factored. I mean, I've bought many houses. I've never had that happen to me, but I found that was quite interesting.
Yeah, and a $10,000 credit card limit, I would say potentially $30,000 to $50,000, it would decrease your borrowing capacity by or increase it by closing it. So they have a huge impact, even if they're not being used.
Gee, so, that's a really fascinating aspect because I think most people just would not be aware of just how much of a negative that would have. So you can kind of understand it where the bank is coming from, because if suddenly you went to that life raft and drained 10 grand, it's 10 grand extra you owe.
Yeah, that's so true. They do look at other debts, and even if they're being paid out on time every single month, they'll still take that limit into account as well.
How much of a problem has Afterpay, because that's relatively, well, it hasn't been around forever. How much of an issue has that really caused people to, get into some trouble, some difficulties when saving?
Yeah, I think it was probably more the banks when they bought out the buy now, pay laters. When clients had those, the banks frowned upon them to start with because it was quite new, and they were just wanting to make sure they were lending correctly. Most of them have pretty low sort of limits on them, but they do actually put a credit hit against your name when you take them out. So you can actually see them on your credit report. So if you put a bank application in and you haven't disclosed that buy now, pay later that you might have forgotten about, then the banks will actually ask you why you haven't declared that debt.
All right, good stuff, Sarah. We'll leave it there. Sarah Thompson there in Geelong. Thanks again for coming on to the Real Estate Breakfast, and stay warm this morning.
Thank you, Craig. I certainly will be.
Every week, real estate transactions take place as the market shifts month by month. And every day, we keep you better informed and updated.
The stat of 80% of the people falling out of the industry is staggering. It's quite disappointing, really, because I feel as though as an industry, we lose a lot of good people because we don't have good career pathways and training infrastructure to help them grow and develop.
The really successful principals around Australia are the ones that don't have the churn, that, have people that are absolutely committed to working alongside these principals.
100%. Look, real estate is a lot about resilience and repetition. We understand that. That's the foundations of the business. But really getting to know the person, identifying their strengths and weaknesses, and putting a team around them to help in some areas that they're perhaps not efficient at will ultimately help them grow. We certainly don't like the idea of the old days where you put an agent into an office, give them the old digital phone book and say, off you go.
We connect you to the best real estate information across Australia. The Real Estate Podcast.